A very good day to you all. Hello and welcome to this edition of Earnings Express. I'm Stacy Pereira, and today we are here to discuss a couple of earnings that we saw that came over yesterday and also a few days back, and we are talking in focus about AMC stocks as well as couple of banking names that came out with their results. Let's look at Bajaj Finance that came over yesterday. Well, we did see some kind of profit taking in the last bit of trade, but today that stock is up and about. We also had AB Sun Life that declared its earnings yesterday. So let's put the focus on NBFCs and AMCs and what these stocks are doing and how should one be looking at them now post their earnings. Well, let's first break down these numbers for our viewers. Let's look at Bajaj Finance first. We saw strong net profit, their growth of coming in at 3,437 crore rupees, 32% jump up, we could say, in the profits. If you look at new loans, those have been booked at 9.94 million. This is the highest ever for the company that they're seeing in their new loans that they've recorded. And if you look at the assets under management, that too is seeing a good steady jump of 32%, coming in at 2.7 lakh crores versus the 2.04 lakh crores on a year-to-year basis. Now, quite a strong number from UTI Asset Management as well. Well, they've seen their revenues jump almost 59%, coming in at 467.8 crore rupees. Now, these numbers looking quite good when you look at the face of it, but you must be wondering whether this is the right time to start loading up on these AMC shares, and how are NBFCs really stacked up against those big banking names who have also declared quite a good robust number for Q1. So let's decode this and see the performances of NBFCs as well as AMC stocks today. And let me bring on board my guests for this. Asutosh Mishra, the head of research institutional equities at Ashika Stockbroking, joins me, as well as Rahul Malani, the deputy VP at fundamental research at Sharekhan by BNP Paribas. Thank you both, gentlemen, for joining us live on this broadcast on Moneycontrol, and we're here to look at a specific niche that has now become much common and much looked after for by investors, especially retail investors, now looking at these stocks and also their earnings more specifically. So let me go to Rahul first and ask him to break down and read those numbers of Axis Bank as well as Bajaj Finance that came over yesterday, and then give us a perspective on how these are stacked up against other bigger banking names.
So good morning, first of all. So starting with Axis Bank reported a strong on the PAT front. The numbers were below consensus and our estimates, mainly led by the higher OPEX costs than expectation and higher credit cost. But if we look at the YOY and quarter-on-quarter sequential numbers are not comparable due to the acquisition of the City business with effect from 1st March 2023. So basically, going forward, if we believe that the outlook on the names continues to remain negative for not for the Axis Bank itself, but for the whole of the sectors. Especially for the Axis Bank, the continued pressure from NIMs as well as the higher OPEX growth led by the business integration expenses of City would put pressure the operating profit growth in FY24. But however, at the same time, would be partly offset the impact on earnings by the strong asset quality and in turn lower credit cost. So basically, in near term, there are certain headwinds in terms of operating profit growth, but over the period of time, I think so. It is expected to do well.
Right. So let me go to Ashutosh then, because one of the main concerns, especially from the banking players that we've seen so far, they've seen good numbers. The NPAs have come down, but one number that getting flagged off is the fact the unsecured loans, those are the ones that are seeing quite a bit of a spike. Now, for NBFC players, that could be a bigger concern, right? So how should one be looking at it when it comes to NBFCs? Bajaj also there. Even Kotak saw that little bit of a flip after its results because of that, because the fact that their unsecured loans or these retail loans are the ones that are ticking up.
We need to look into unsecured loan from a different angle. If you go back and take a history of 10 years or even 15 years and try to find out which segment of the banking has generated more NPA, you will find the corporate has generated more NPA compared to unsecured. unsecured personal loan. In the unsecured personal loan, which is one category which is a little bit of painful for the sector as a whole, is basically a microfinance institution. If you exclude the microfinance part of the unsecured loan, then unsecured portfolio has done far better than the many other part of the banking portfolio on a long-term basis, and that include a different economic cycle of 2008, 2013, or even post-demon 2016-17 and COVID also. So in my view, it is not a matter of a concern that unsecured loan portfolio is going up. What we need to understand is that underwriting practices has improved substantially in the last 6-7 years post bringing of Aadhaar, the way bank underwrite the loans or NBFC underwrite the loans with the inclusion of the fintech has totally changed the sector as a whole, and that has also impacted the behavioral part of it. So I am not at all concerned about the growth of unsecured loan portfolio. What I am more concerned about it, what is the recovery mechanism put by the different institution, and that is an important thing. What is the underwriting practices for each and every segment which they are doing it, and then some special attention required when you are doing the business, because that has some bit of a painful part of the overall loan portfolio. So if you look Kotak as well as Bajaj Finance, both of them are, which were totally were not into the MFI business, but for the last 3 years they slowly start entering into this business, and especially the last 1 year, both of them are delivering very strong growth from this segment. So clearly indicating that even the most conservative management is now seeing the good opportunity because of the change in the way business is conducted for the whole space. So in my view, it is not a concern. It is giving a good business to the banks and NBFC at this point of time, and we need to see this from the change perspective.
Right. Rahul, let me get in your view as well. Do you think this could be a worrisome figure, these unsecured loans, the retail loans that are playing up, especially for NBFC players?
So basically, anecdotally, evidence says that retail lenders are in trouble when there is a substantial downturn in the economy, which has been evidently seen in the Lehman Brothers crisis, and secondly, which was accelerated seen in the COVID period. So basically, till the point there is not a substantial economic slowdown, these retail lenders will not see accelerated pressure on the asset quality. Apart from that, Mr. Asutosh alluded that there has been substantial improvement in the credit underwriting. Previously, they did not used to take help of the data analytics and whatever the bureau data was generated. After the COVID pandemic, most of the lenders have focused on starting emphasizing on the using the data appropriately from the taking the data from the bureau, as well as empowering and most of the large private banks, including the top NBFCs, if you look at their portfolio, their portfolios have been seasoned in the retail at least in the retail space. If you look at, so they know how to manage this cyclicality in the retail portfolio.
Right. Well, okay, let's also look at AMCs now and turn the focus there, because the biggest fear there is tighter regulations, at least of what we are hearing from SEBI, what we are seeing them, in the earnings also we are seeing those kind of trickle in. But SEBI has gone out to say that now there's going to come out with a fresh set of guidelines when it comes to TER or total expense ratio, and that is charged by these fund houses. How much of that is really going to have an impact on these companies? Well, at least for what we've seen from the earnings, they seem comfortable right now, but could that really be that game changer then once we have more details on this? Ashutosh,
okay.
Yeah.
So AMC sector has gone through many changes in the last few years, and especially a lot of discussion is there on the TER part of it. I think SEBI has also learned from the representation from the industry, and they have gone back and will now put the new discussion paper on the including expanding the TER and the way they want the industry to progress from here. Access regulation always kill the industry, but I think SEBI has also understood this part of it, that they need to relook at the regulatory aspect which they are trying to portray at this point of time. Classifying everyone as a thief is not a right approach, and our regulator are now the changes in the regulatory view, especially before the two meeting where they defer the TER decision, was very positive in my view. And now they are reconsidering the whole decision. They are looking at all the data afresh. So yes, there is a lot of things getting evolved in this space, but we are very positive from the long-term perspective of this space out there. Market is still concerned not only from the TR perspective, but also from a few large names which is entering into this industry and the impact of the same on overall. But what I want to put a bigger picture is when we are as a individual equity holding is increasing at a retail level substantially. It has from the last 4 years, it has seen a tremendous change. We all were thinking in the last 15-20 years that materialized in the last 4 years. And many of these investors will become a very good source of mutual fund, both on a passive and active side of it. And then, yesterday, if you listen to the Prime Minister, he was talking about India becoming third largest economy. Per capita income of our country is going up. From that perspective, if you look at, then we clearly see that the scope for the industry as a whole is very huge. And given that scope, and we clearly see there is a very good business opportunity for a serious long-term player, and that's what we are also seeing, that many new and very serious and new people are also entering into the business. So yes, there are some short-term concerns, but long-term looks good out there. Market will be a little bit concerned at this point of time for sector because of these things, but if you get at a more reasonable valuation, I will be surely.
Correct. We will get back to the new players looking at this space, of course, but let me go back to Rahul and ask him, while we've seen banks have a good run, and on the expected lines, even AMCs here, one portion of them doing pretty well in this space. But can we make a fair comparison and look at how if you have to compare NBFCs to the bigger banks and how they are placed, and what really are the headwinds they could face going ahead? Because with banks and all, we know, yes, they are taking care of their NPAs and all of that, but for NBFCs, what could be, besides regulations, what could be those headwinds?
So basically, during the lower interest rate cycle and at the peak of the when the interest rate cycle is expected to peak, normally, historically, we have seen that NBFC tends to outperform banks, because the reason is obvious that in terms of margins, there is a tailwind in terms of margin, because during the higher rate cycles, the liabilities get repriced faster than the asset repricing. So there is a time gap between it. And in case of versus in case of banks, they get advantage in the higher rate cycle in terms of improvement in margins faster than the liabilities get repriced at a slower pace and with a lag. So as now the interest rate cycle is close to peak almost, and so there is a margin tailwinds for the NBFC as a whole, because most of them caters to higher fixed rate book. If you look at the loan mix of their asset mix, other than the mortgage NBFC, housing finance companies, other diversified NBFCs have a higher share of fixed rate book, which should benefit into the lower interest rate cycle. Apart from that, during this period of in last 2 years post the COVID pandemic, most of the NBFCs have been into accelerated investment cycles, leading to digital transformations and into expanding the distribution reach at the point of time where so because going forward, we believe that outlook for NIMS is strong going forward, at least not in the FY24, but because due to the lagged effect in the cost of, we will see eventually in the first half or for till the third quarters of end, cost of funds inching marginally for the NBFCs, but after that FY25 outlook continues to remain strong on the NIMS front. And in terms of operating leverage should also benefit NBFCs, because all the companies are are exiting their investment cycles.
Right.
Apart from that, strong asset quality and in turn lower credit costs should continue to help
Correct. And we are seeing central banks also work in tandem with that, and all of them also come on board. Today we had the Federal Reserve also go up and hike those rates. So a lot of those macro uncertainties are also kind of fizzling out. We could say reaching that peak like you were pointing out. But let's talk about these new players that are entering the AMC space. And today there's been a lot of buzz. That's because Geo Financial Services has announced that 50-50 JV with BlackRock. Now this is a formidable player in this space, and they're going to have this JV that they're setting up will be quite a bigger competition to all the already established players. So is this really going to be that game changer, and how do you see this space really going forward? Asutosh.
So, yes, it is a welcome news that new players are seeing the growth opportunity for the space, and they are coming into and starting the new venture out there. So I clearly see this as more as a positive stage. Coming to existing player, what will be the impact of it? There are many good existing players in this space, and I don't think so. It will be right to compare what happened with the telecom can happen into the AMC part of it. These are the two different businesses with the two different dynamics. There is a scope for the larger player, there is a scope for smaller player, there is a scope for active AMCs, there is scope for a passive fund with a more of focus toward the passive side of it. And best example we can take from the Western world, where across the line, the large mutual fund, ETFs, as well as hedge funds survives together and thrives together. So I don't see any major business impact of it. Yeah, psychologically, what has happened in the telecom, probably market is trying to anticipate it, and market is right in thinking in that direction. But if you look at actual business part of it, we have already seen disruptor like Navi. We have seen disruptor like Zerodha is coming into this space out there. So with Reliance Jio also coming in, this will only deepen the market out in my view. Will also stabilize the regulatory part of it. More serious player coming into the play will also create somewhat of much better dialogue with the regulator on how to take forward this industry out there. So I'm not seeing the negative part of it. I'm more focused towards the positive part of it. Yes, some inefficient player in the industry may go, and that is a part of wear and tear which always goes across any industry. But I don't see a repeat of the telecom type of things where in the AMC space because of the entry of Reliance Jio.
Right. So, well, we're not anticipating some big bang changes there, but definitely a welcome move is what most people are looking at it. But some of the AMC stocks not reacting to them in that certain way because of competition heating up, we could say. But of course, now the focus is come back to AMCs and how they are looking forward. We are seeing a lot of record high demat accounts being opened month after month. That AMFI data really shows us this. So a lot to be looking out in this space, and well, earnings also really propelling these stocks and these companies at this point. But I'd like to thank both of you, Asutosh Mishra as well as Rahul Malani, for joining us on this show and giving us your perspective. Thanks so much for joining us live, in fact, and to all our viewers who've tuned in, thanks so much for watching.